Can you hear me now? Is it better? Can you hear me now? Can you hear me now? Because I think I did mess up my OBS. Alright, cool. Okay, my bad. I messed up my OBS because I was trying to figure out how to show my screen, and I ended up closing everything, so I didn't know that the sound was not coming. Anyway, what I was saying was that investors, right, because today is Easter Friday, investors have gone, or they are going on holiday for the next 2-3 days. So what ends up happening is that they kind of move differently. If you study price between this weekend and also study it during the Christmas period, you see something similar. All right, this is the last washout where they do that before they go on holidays. So I think, in my opinion, this move here, right, was just because of the Easter holiday, right? Nothing else. And I was saying that this big movement was crazy, but it created opportunities in the market where British pound, right? We had a nice bearish order block here that could have been used to sell short. So what I'm doing is just basically going through high probability setups that happened over the course of, because we did meet on Wednesday, right? We didn't meet yesterday, so I'm going through some of the price action that occurred during that period and what you could have done. Okay, so we have British pound trading into this bearish order block and causing price to reject. Now, how is this a bearish order block? Look on the daily and then you see why it's a bearish order block. It's within a swing high, right? So within a swing high on a daily time frame, that's where this is. So that makes this a nice bearish order block. Now I'm not going to go into details why it's within that swing high. If you want to learn that, you can join me and for my live sessions, and then I'll show you why. But it's within the order block, the swing high, that makes it high probability. So there was always a potential that price was gonna retrace, but I did not expect this kind of big movement, right? That's crazy, right? That's some crazy movement over there. So it has now given the opportunity to go long in here. So we do have an engulfing in here. So where I have placed my buy limit is right here. So I've placed a buy limit to come back and attack this high next week. All right, so that's where I'm watching for price to come to. And you can, for those of you that under my I'll say mentoring those that are under my mentorship, right? You know what to do inside here to find your actual level that price is supposed to come to, right? But if you don't, just use this high. It's the last down candle, right? So just use that. Leave your stop loss down there and expect price to come here, and then look above it for these equal highs as well. So that's an opportunity for next week. But like I said, if you're under my mentorship, you know what to do to find the actual entry that you want to get in, okay, by going through the lower time frames. I only like this one. I don't like euro. Euro is too bearish. If it's coming back up, you might want to target this imbalance in here. Okay, you might want to target that imbalance up there and wait till we go above it. Okay, so if you get buy, target here and then close everything. Wait for it to go above that high, then you can resume buying again, because this is still bearish. So this is going to be just a retracement, and then by default it should go back down again, right? So if you get buy to come up there, which it might struggle, but we will see, then wait for price to break this high, and then use that same area as a resistance. So it's gonna initially act as like a brick wall, and then once it's able to go above it, then look for retracement for a continuation. All right, so euro, it's too bearish, so I'll trade the British pound instead of the euro. Okay, hence you have this one, the New Zealand. This one is bearish. It's gonna go and attack this low, and even maybe that low as well. So I'm not trading this. What I'm doing is I'm using the strength on the euro and the pound, because right now, especially the pound, right now the pound is stronger than the New Zealand, right? Because New Zealand is struggling to go up, whilst British pound is going higher. So that will give pound New Zealand the boost to go higher. So I'm actually long on this one already. Since yesterday, I caught that low in here, and those of you that are with me, right, you know why I got that entry. I just went through the lower time frames and I found that, and then during the New York session, hit it, rejection. So I'm targeting this high, and then that 196047. Today is bank holiday, or a holiday, so we might not get big movements. Maybe New York session, I don't know. Maybe the New York session might provide some movement. If not, then this is just going to be consolidating up until Tuesday, because Monday is also a holiday, right? So we might get it to consolidate till Tuesday. If we do get movement, then it's gonna go and attack this. If you look here, right, we do have a swing low created, 1 2 3, and this is, this has pulled back into it and it's going back up. Now, here is YouTube. I don't like teaching too much things, so but if you look closely, right, price movement, it's very I won't say easy to read, but if you pay attention, right, you're gonna see so many things that price is doing that is very predictable, in the sense that last Wednesday, I gave you some drawings, right, and I did something like this. Right, and I gave you some lessons around it. When you're looking at the candles, okay, I want you to pay attention to what the candles are doing. Don't sit in front of the screen just watching patterns. Okay, learn to read the tape. If you sit in front of the screen, right, your job is to actually try to figure out what price is trying to do, and these candles, they tell you exactly what they're trying to do. Okay, look here, we have 1 2 3, not a nice or not a perfect swing low, but after this, did price go down? No, it went higher. We have another 1 2 3. After that, did price go down? No, it went higher. Notice the time frame I'm on. Okay, I'm on H4. I'm not on 15. I'm not on 1. I'm on H4. So once price forms that low, right, it pulls back, but look closely what it did. Okay, it took out this low. It took out that low. So what does that mean? It means that if you were trading or if you were looking at the daily time frame, what would this one be? This one would be a run on a previous day's low. On the H4, you can think like that. Okay, this is a run on a previous period, right, interval, right? So run on previous interval, price rejects. At the same time, we form a swing low whilst we are looking for higher prices. So with that, you can just simply drop down to the lower time frame, aka 5, aka 1, whichever time frame you prefer, and then you can start looking for buying ideas in here. Okay, you can start looking for buying ideas. Now, what's cool about this is that as price is going up, right, there needs to be price has to find a way to come back for retracement. So if price is gonna come back for retracement, it needs to know, or it needs to have reference points to know where it's gonna retrace to, because I don't believe that it's random. Okay, everything is well controlled, everything is well calculated and planned. So if it's gonna go up, right, then it's gonna leave something down here for it to come back to. And in my opinion, this run below this low is the trigger. Okay, I'm giving you some lesson in here, even though I don't want to. The run below this low, causing price to go up, that is setting up an opportunity for price to come back. Because think about it, if price is just going up, when it's coming down, it's gonna go down, down. But if price is going up and it takes out stops and it leaves, then it has a reference point that, okay, as I was going up, right, I took some stops here, therefore I might have some orders here. All right, so if that's the case, what kind of level is price gonna come back for? The gap. Okay, the gap. So as it takes out the stops and then it leaves, okay, the gap or the imbalance that price leaves here is what will reference something within, say price goes up here, okay, say price goes up there and it's coming back for retracement. As it's coming back, right, because it took out this low, it's gonna have a reference in here that, okay, I took stops here and I left, so I have something here that I can retrace back to, which is the imbalance. All right, so when you sit in front of the screen, right, study how price is moving, because like I said, price is not random. Everything is well controlled. It's moving like a perfect Swiss clock, because there's nothing random about what price is doing, in my opinion. If it was random, I don't think we'll be able to trade it. It's the fact that it's not random, that's why it keeps creating patterns, right? But you don't need to trade the patterns, you need to read what it's actually doing. Okay, I'm giving you some hints here. You need to read what price is actually doing so that you trade price instead of patterns. Okay, so look for these two trade up here. I had a buy limit pending in here and it missed me out, yeah, couple of pips, but I still think it might come back down again because we have H4 swing high right there. Now if it leaves here, and people that are not patient will buy this move and they're gonna leave their stop losses below this low, whilst we have the actual level price is meant to retrace to. So if they do leave and doesn't come back, I like this level more because it has this short-term low right below it. Okay, so I think there's something going on in the trading industry. I think something new. I don't know if it's new or not, but if you've heard about it, it might be new to you. It's called inducement. I don't know if you've heard about that terminology, inducement. The terminology inducement. Well, this is setting up an inducement. Okay, they're leaving that low and they will induce them. Okay, so when back to the what I was explaining on this one. This one is a run on stop. Okay, it's not inducement, it's a run or stop. But as it's leaving, it can do something like this. Okay, and then leave lows just below where price is supposed to come for, and then they'll come back down, induced, or take that lows and then continue going higher. So that's what I think might happen here. If not, then this bearish order block here should hold price and send it back down, and then you buy it, targeting this high and then leaving something on for that one. Okay, apologize if you can hear some background noise. That's my son. I've got my sister-in-law coming visit, and she came with her kids, and they're playing, so they're running up and down. Next one is pound Aussie. Pound Aussie should also go up. Yesterday, I actually got stopped out on this one, but I managed to get it back on pound New Zealand and pound Swiss. I'll show you pound Swiss. I went long initially in the morning in here, and I was anticipating price to go here, and then that crazy euro rate announcement just sent price down, took me out, and then rejected. But I didn't feel the need to jump in on this one because I could clearly see this level, so I bought this one rather. And pound Swiss, which I'll show you now. Okay, there is. So pound Swiss, during London yesterday, I could see them going for this high, but I did not target that specific high. On the 1 hour, this was where I got out inside this right here and drop down to 15. I placed my exit right here and I just left it. I wanted to go for the high, but I was thinking, these guys, they like manipulating, so let me get out here. And it was a demo trade, by the way. And what I did, I placed 25 lots. I placed 25 lots on that trade. So I got in at 7:30, somewhere in here, right? And then I targeted that level with a 25 lots, so I made like 14k. Yep, I made 14k on that trade. So this loss didn't feel like a loss to me. It just felt like it gave opportunity elsewhere. I still have this one running, this trade running, and it's making almost 7k on that one. All demo, okay? It's not live, it's demo, but I'm just showing you what you can do with the information that I share with you here and the information that you get privately. Because demo and live, there's no difference. The only difference is your emotions that runs when you trading in live, which is the hard part for most people, because they get so much attached to the money, they can't let go, right? So that's the only difference between demo and live. So yeah, look for a buy on this to continue going up. I did not touch this pair the entire yesterday, but I had a level in mind down here. You see why this H4 auto plot somewhere down here. I had a level in there that I was waiting to see if they can drop to that, and then I'll look for a buy, but price never did that. So, but if you want to, I think it's gonna go and attack this high. It's bullish. There's nothing bearish about this, so don't look to sell, just look to buy. And the ideal level is somewhere down here, right? Or if you can't do it, just pull the fib and then buy retracement to 618. Right, buy retracement to 618 for the continuation. And look what we have here. Okay, what I explained earlier, it's staring at your face right in there. Price is going up, right? It made a new high. How did it know it has to retrace to this particular level before going up, right? That's something that I personally is a challenge for me, or I put that challenge on myself, that I need to know. Why are you turning? Why do you have to come here? Why do you have to come here? Or why does price has to come here before going up? Okay, if you don't challenge yourself in price, right, to understand certain things, you're just gonna trade patterns and patterns and patterns, and when patterns don't work, you have problems. Okay, my goal is I want to figure out exactly everything about price. Okay, I don't know about your goal, but my goal is I won't say I don't want to be perfect. No one is perfect, but that's what I'm looking for. I want to be the market itself. That's my personal challenge. Okay, I want to be the market. When I say I want to be the market, when I turn on any chart, I want to be able to know what it's going to do before it does it, even though I know 80% now. I do have idea what it's going to do. Sometimes I do get some surprises like yesterday, but I want to know everything. Okay, that's my personal challenge. So I put myself down to learn these kind of things, where I want to know, why are you turning here? Why didn't you turn here? Right? Or why didn't you go down here, but you decided to turn here? Up here, why didn't you make a new high? Alright, ask yourself those questions. Why you? Cause me, I just found out that I have a bit of a OCD, right? I want everything to look perfect, and I discovered that when I was actually painting, I was painting my house. I had my wife come in to help, and as she was painting, I was looking at her. I was just looking at her thinking, I hope you're doing it right. I hope you're doing it right. And then if she messes up, I'll go there and I'll tell her, look, you didn't paint that area properly, right? And then I'll do it myself. So I got to a point that I wanted her to stop, and then I'll do it myself. But it was too much work. Then I started thinking, is that how truly I am in the normal life? Because that it's good in a way, but it's because I'm always looking for perfection, right? That's me. So when I sit in front of the screen, I want to know, okay? I want to know why. Why are you doing this? Why are you doing this? Okay, why didn't you turn around here? Why did you have to come all the way here? Okay. If you ask yourself those kind of questions, right, you will see how price is going to open up itself to you, because it's it's um it's a law. The more you want to know, the more you will know. Okay, the more you desire something to happen, the more it's going to happen. So I apply that with trading or with the charts. I want to know, and then I get to know. And I'm always going to know. All right. So yeah, we might get price come down here. I went a bit on a rant, but we're looking for price to come down here and then continue going up. Okay. Let's go and look at crude oil, because crude oil has been amazing this week. And if you remember, I think we had a session on Monday or Tuesday and Wednesday. Yeah, we had one on Tuesday and Wednesday, or Monday on Wednesday, something like that. And I gave you this level. Those in the Telegram, in the free Telegram, I think that was the last one I posted when we had our session on Wednesday. So if you go to that free Telegram, you'll see that the last one that I posted, apart from the general market overview that I posted this morning, the last one was oil, crude oil. Okay, and price was actually here, I think. Let me check. Yeah, price was here. Okay, and I said price is gonna come up here. All right, and that very day I got a buy during London, because we did a London session. Right in here, I said if it breaks above, it closes above this high, but I would prefer that H4 candle. This was the candle that was trading at the time. Okay, and I said I would prefer them to close above this down candle, and if it does, I'd be very interested in buying. But it was the 1 hour that closed, not the 4 hour. So I bought it right here. Right there. Retracement to that is what I got. And then it started moving. During the New York session, it started playing up. So again, for those of you that are in the private group or mentorship, it retraced back to a level just as I've explained to you today. Okay, when it's going up, how does it know it has to come back to this level? Or how do I know it's gonna come back to this level? Because it left fingerprints down here that is gonna come back down there. So it got back there and I got another entry. Okay, and then yesterday, before leaving, guess what? It left another fingerprint here. So that's exactly where I had a buy limit. And this is the inducement. I actually got induced, or I bought early in here because I thought that it wasn't gonna get there, because I'm using the fib at the same time, right? So it hit that on the lower time frame, it broke market structure, so I bought here, and then I left the buy limit, because if it's gonna go up, first of all, I'm confident that it's gonna go up. Okay, so I'm confident that it's gonna go up because high time frame is calling for high prices. So I'm confident it's gonna go up. It's just a matter of trying to get an entry with a stop loss. So once it broke market structure on the lower time frame, I bought it and I left my buy limit in here. And guess what? I came back to that during the New York session. So I got 2 entries. This one being a sniper entry, and then the rest is history. It just ran up quickly to that high, and then I closed partial. And what I did, I don't know what I did wrong, but after closing partial, I wanted to close the entire trade because I realized that we are going into Friday, and I took the trade on the futures, the demo trade. I took it on the futures. So if I don't close the trade, it will end up being like this. All right, market is currently on holiday. So I tried to close it on my phone, and guess what I got? For some reason, it took a sell. So here, I closed it, and TradingView took a sell for me for absolutely no reason. So I ended up giving back a small amount of profit in here. I didn't see it. I went to check my phone, and then I saw that minus $480 drawdown. I'm thinking, how come? So I checked it. Apparently it took a sell for me, but I 100% sure I hit the close button, and it did that. But this pair, or this instrument, has been amazing for this week, and it brings me to something that if you learn, it's gonna help. Always try to determine the draw on liquidity. Okay, that is your number one priority. Now, if you are still learning, try to learn where price is trying to reach for. Okay, that should be your goal. That should be what you should be spending most of your time on. Forget everything else. Try to learn to determine where price is trying to reach for. So earlier when I said my goal is to know everything, my priority was to figure out where price is going and why is it going there. Okay, that's what I've spent most of my time on, right? And I think I've if I'm 70% to 80% right, that's fine. I don't have to be 100%. I wish I was 100%, but I'm not. But most of the time, I know the draw on liquidity. Okay, so that's your challenge. That's what you should be aiming for. Try to know where the market is trying to reach for, because once you have that, or if you know what the market is reaching for, everything else will be easy. All right. Once you know where price is trying to reach for, everything else will be easy. Why? Because the draw on liquidity is going to be a direction. or quote unquote directional bias. So if price is drawing up here, everything is up, 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 up. The rest is what? Trying to get an entry like I did here. And there are so many ways you can, once you have the draw on liquidity, there are so many ways you can get an entry, right? You can use Fibonacci, you can use all the other stuff out there, like the I used to love to look at it. It looks beautiful. The harmonic patterns, right? Those were the two that I love: Fibonacci and harmonic patterns. Boy, I've done a lot of things, but yeah. Once you have the draw on liquidity, right, then the rest is going to be easy entry. You just have to figure out how you want to get in to get there. The only hard part is knowing where to get in properly with a proper stop loss. Because if I know price is coming here, right? If I know price is coming here, if I buy there, okay, if I buy here, I get stopped out, but I'm still right in my direction, right? Or if I buy here, I get stopped out, but I'm still right in my direction. So once you figure out, or once you have a good level of forecast to where price is going, the next challenge is going to be, okay, how do I get in without getting stopped out? And that's where the studies of trying to figure out why price turns where it turns comes in. So between here and there, right, how price gets here, you want to find, or you want to study how price moved, so that you can look for a pattern to trade to get to your destination. So one thing that I personally do is I look for order blocks to form. That's the easiest way. So if I know price is coming here, I wait for an order block to form, and then I will trade that. Okay, so if you're looking for something, you can use, like I said, Fibonacci. You can use the harmonic patterns. You can use anything. Okay, the first thing is know where price is going, and then use any kind of entry technique you prefer. I'm mastering reading the candles, because I want to read. I don't have the DOM, or I don't have the real market knowing how many orders are coming in every hour or every minute or every second, but I do know by reading the candles. Okay, because the candles are just not candles. It's actually money, or people placing orders, that's causing that. So if that's the case, then their actions are going to be on the candles or in the candles. So I read the candles, right? For example, the entry that I got on this one, okay, it was based on, I saw that someone smart somewhere wanted to go long, and then they took out this low. Okay, and then after taking out that low, guess what? They broke above this high, this short-term high right here. So in my mind, this dude, whoever did that, he has got money. He wants to go higher, right? So he's gonna come back. So on his comeback, I'm joining him, and then we go. Okay, targeting up there. I think I've got rid of it. Targeting here. So you can do the same thing. Okay, you can see they did the same thing here, and that was what I was trying to communicate earlier. Someone smart wanted to come up here. Guess what? They run this low out, took price higher. So what's he gonna do? He's gonna come back. Where is he gonna come back to? Where he started buying, which was here. He started buying here. The down candles moving down, that's the other block. It's gonna come back to it and then go back up again. So that's how I read it, because I'm trying to tell my mind that there is someone smart out there. So just join him. Learn to read what that smart person is doing, and then just join him. So that's what I do. But like I said, if you can't, because sometimes it's hard to catch them. Sometimes they are dodgy. So if you can't catch them, then use Fibonacci, because that Fibonacci always put them almost where they're gonna get in. So 618, you're looking for higher prices. Another one in here, looking for higher prices. Okay, so if you just do the Fibonacci, you'll be okay. All right, so that's how I managed to catch this trade to come up here. And also, how did I know price was gonna come up there? It's based on order flow on the high time frame. Okay, it's based on order flow on the high time frame. We took out this short-term low, and then we broke up in here. So we took out short-term low. It's just the same thing on the lower time frame. It's the same thing on the higher time frame. Okay, so if you look here, all right, think about it this way. Taking out this low, price rejecting, it has a target up here, right? Because price was coming down, 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 and then all of a sudden, boom, we changed direction after taking out this low, right? So if that's the case, then they're gonna attack a high. Which high? Well, the move started from here and it went down. So if they've changed the direction, then it's gonna come and attack this high. This is a 15 minutes time frame, right? Translate that to the daily. So price was going down, 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 took out this low and that low, and then boom, broke above that high. So what is he gonna do? He's gonna attack highs. So he's gonna attack this one, he's gonna attack that one, and then potentially that one as well, because this is the move down, right? So with that on the higher time frame, it gives you what? The context. It gives you the draw on liquidity, right? So this one you have to sit out, because that's where price broke structure. After it broke above that, then you look higher. What highs do we have? This one here, and that one there, and that one there. Okay, as much as I don't want oil to go up, because that's gonna cost me money to get more fuel, it is gonna go up. Okay, it is gonna go up. So look for higher prices. Now let's see where they can retrace to, and it comes back to what I've been trying to communicate to you. Notice that before price went and made this new impulse leg, what did someone smart out there do? It took out that low and then sent it higher. So if that's the case, if they want to buy more, where is it going to retrace to? It has to come back to where they started buying, from here. Okay, so you see where it's bringing you to? Right there. Now obviously you can go in and find the precision, right? But that's for those of you that learn privately with me. I've showed you, you can go and do it, right? So look for oil to retrace down here, and then you buy it again. All right, so that's oil. I love it. I love oil. It's actually a very good pair. If you want something that it's very clean to trade without no noise, trade oil, because to me it's fantastic. I've been trading it for quite some time now, and trust me, price action it's very forgiving, unlike a Swiss pair. Okay, unlike a Swiss pair. Let's look at gold. So gold, yesterday I got a long in here, and I was anticipating a new high, but it did not do it, and it attacked this swing low on the 4-hour. I took partial and it came and stopped me out, but on my real account I still have that trade running because my stop loss was below this. So when I'm taking a trade, right, and I'm placing a stop loss, I don't go by the conventional way of, okay, because I'm long here I have to put my stop loss there. No, I look below price, because I explained to you earlier about crude oil. You could be right, but price will stop you out before going, right? So one, hint, secret that you want to do is, anytime you're placing your stop loss, look below where your stop loss is going to be, and then try and see if there is a gap, aka if there is something like this with a gap. Say you're buying, price went up, okay, and say this is an order block you want to buy, and you're gonna place your stop loss here. Okay, just look below it, because there could be something like this down there, and then what they do, boom, hit that, and then boom boom boom, go up. All right, so when I looked at gold on the lower time frame, you can see I have a line there on the 5th, I think it was on the 5 minutes time frame. Let's go to the 5 minutes time frame. Look what we have. So I'm thinking, okay, we are bullish, right? So if you're gonna go up, you will keep going up, but if you want to take people out, you might drop into that if it doesn't, right? That's a big if, because I'm buying this imbalance in here, okay, like I did here. So I'm buying that break in market structure, I'm buying here, but if I'm wrong, it's gonna hit this and then continue going up, which is what it did. Took out this low, which is on the H4 in here, right, into that level there and then started rejecting. So if I had left my stop loss here, what would it have done? It would have stopped me out, right? And then still go my way, and then you'd be frustrated. So what I did was I placed my stop loss below the up candle's low right here. That's where I left my stop loss. But if it goes there, I'm wrong. I'm willing to absorb that. So if it goes there, I'm wrong. But as long as price is above that gap and the draw on liquidity, remember that, okay? Because that's where the narrative is coming from. The draw on liquidity is higher. Right? So if the draw on liquidity is higher, then they can do things like this. And guess what? That creates, wink wink, that retracement level that once we make a new high is going to come back for. So what that will end up creating is that it's going to go up and it's going to come back to here and then continue going up. Okay, so gold should continue going up. I think it's going to attack this high on the H4. I think it's going to attack this high. There's a small imbalance in here that price is reacting off from. Hint hint, wink wink, right? Price going down, it left something that it can come back for. Right here. So that's where we are currently at, but it's gonna go through it. I think it's gonna come up there. So next week you can look for a buy on gold. Let's go and check another trade that I have on dollar CAD. So dollar CAD yesterday, that's what I was saying earlier, that the movement that happened actually created opportunities. Now, I took a sell in here. Trading sometimes can be it can be so funny. Let me clean all this. Let me give you where I was anticipating. So my target was on the H4, this one. It was a small trade, but I did end up playing out. I took a sell in here based on the 1 hour. This one, this impulse leg, this pullback, but I was targeting this imbalance, which is this one, because in my mind, okay, we broke down, we formed a swing high. So what's price gonna go back for? Hint hint, wink wink. It broke market structure here. Someone smart did something in here, went down, went up, so it's gonna come back for this, right? And within that is where this thing is. So that's where I was targeting. And because again it's not bearish, because the break of structure is here, so it's bullish. So this is just a what, retracement, so it can go up at any time, hence I targeted this. Now once it did hit that, I took on the lower time frame, that was my entry. Once it hit this, I closed partial, because I wanted to see if it can go to the next gap, which is this one here. So I closed partial, and let me turn off this auto block. Right, I closed partial right here, and then this one happened, and then all of a sudden, boom, I'm thinking, man, I should have left it. I should have let all that position, or my position that I took here, I should have let it go with this candle. And I was thinking there, should I take another entry? And I was like, nah, I'm not taking an entry because this is a counter trend trade. And then all of a sudden I saw this one, boom. I was like, okay, I'm glad I took the partial. Let me just close my trade. And I closed it, right? So I ended up closing small leftover of the actual trade there. And I didn't look at it again because I had a sell limit up here. And you can see what it's done. It just run up into my sell limit and now it's rejecting. So why am I selling up there? It's the same thing that I've described since the beginning of this session, right? Someone smart sold up here. How did they sell? They started selling from here, right here. That's where they started selling. So they sold most up here and then broke down. How do I know that? That big candle, that big fat candle there, gave it away. So upon retracement, this is where I place my sell limit, right? In my camp, you can go and do some analysis on the lower time frame and actually get this entry here, but I'm showing you the easiest way. It's this one. Okay, and that's the easiest entry. And then I left my stop loss there, as you can see, and I'm expecting it to come back and attack this low. I'm gonna partial out here because as price was moving, someone smart did something here. Alright, so I'm gonna partial out there and I'm gonna let the rest run to see if they can get into the next gap on the H4, which is this one. Alright, so that is dollar CAD for you. Hopefully, I don't think it's gonna move today. I think they'll they'll move it next week, so we will see next week. But look for dollar CAD to drop. I missed out in here. Sometimes you can wait for this kind of conditions, which gives you a better entry with a better risk to reward. I just didn't have time. I have visitors over here, so I didn't have time to be babysitting this trade. All right, so I just placed the sell limit and I just left it. But in here, it did the same thing, right? And then it pulled back, and then you could sell short with a stop above here and look for lower prices. Today is Friday. If we don't drop next week, I think it might run one more time up into taking out this high. So be aware. Okay, the fact that it's Friday, once we go into next week, is a whole different game. So you can look at that and run. You can sell short as it runs in there, or you can wait for it to run up there then you sell short there, back down. All right, so that's dollar CAD. Bitcoin, let's look at Bitcoin. Actually, let's go to future indices. I have the drawings on my other computer, but on the, that was a nice entry there to come down here. it didn't get to my TP down, which is frustrating. It never took out that low. If you care to know, that low was left intact. I was given the narrative on the high time frame for my private group, right? And I told them that we're gonna get a drop from where we are yesterday. Why? How did I know? The higher time frame draw on liquidity, right? We made a new high. Let me remove all this. We made a new high here. It's on the weekly time frame, but I'm just using the daily to show you. We have this, that, this. So what's price supposed to do? It's supposed to come up and go down. But what did it do? It made a new high. So once price makes a new high, always anticipate what? Some form of a pullback. Okay. Once price makes a new high, always anticipate some form of a pullback. So with the pullback, price is gonna go to where? Something. What something? That's what I said earlier. Once you sit in front of the screen, try to figure out why it's turning, where it's turning. So that something, in my opinion, is here. That's what price is coming for. All right. So all retracements are subject to sell. Every retracement is subject to sell. It goes back to what I said earlier. Your direction will be right. Your entry and your stop loss is where the problem is going to be. So you learn to see how they are moving price towards your direction. Okay, you learn to see how they are moving price towards your direction. And if you want to, always wait for, hint, hint, run on liquidity in your favor, not against you, in your favor. Wait for the run on liquidity in the direction that you're looking to go, then go in. So how does that look like? Well, when price is going down, that is a run on liquidity. That is a run on liquidity, a run on stops, sorry. That is a run on stop. So we had a run here. On the lower time frame, you got an entry there. I have a run here. On the lower time frame, you got an entry there. And then they have a run here. On the lower time frame, you got an entry. On the 15 minutes, that was a perfect entry. Right here. For optimal trade entry, that was a perfect entry. Right? The one that I loved was this one here. Because I told them exactly, yes, the market is closed today. Not all of them. We have the currencies and Bitcoin still moving. It's not moving as much as I want them to move, but hey ho, it's still moving. I told them exactly what happened to euro. Let's go back to euro. I said, watch this pair, which is the US30. Watch it do the same thing that euro did. How? Well, All right, sorry for that. I had my sister-in-law kid come in. Okay, I was saying in here, right? Notice we have 1, 2, 3. That's a swing high on the daily. Also notice that everything that I'm pointing you to, I start from the higher time frame before I move into the lower time frame. You should do something like that. Always look higher time frame first. If your trading is not going well, you're missing the higher time frame. It's as simple as that. We had this swing high in here, right? So price is bearish. It's not bullish on the daily. With that swing high, price is bearish. If you have a swing low, price is bullish, right? So there's a high probability that within this, especially from this candle's low and up, okay, within that, remember I said that you might have someone that is smart and you want to track them. Okay, this is how I track them. Within that area, I think someone sold. That's what caused this candle. Not necessarily this candle, but in here, that's where they did that selling, especially from that candle. So when I'm looking from this candle's low and up. That's what I'm interested in. I'm not interested in the low. I'm not interested in this low. Okay, I'm interested in that low and up. So from here to that high is where I think whoever is smarter than me, that's where they sold. So my job is to go in and identify where they did the selling, right? You can see they did actually sell off a little bit in here, but that's not what I'm interested in. I'm trying to show you something, but I don't want to say it. This move is what makes this this move here is what makes this area interesting. I'm gonna repeat that. This move here, this move from this high down, is what makes this whole area interesting. So if you've noticed, right, go through price, okay, and then identify what I'm showing you, and you'll be surprised to see it. When you see an auto block, okay, on a daily time frame like this, like that, steady it. Begin to study auto blocks. Okay, that's my gift for you for today. Begin to study auto blocks. Study them, like really study them. Because what happened to US 30 actually confirms what I'm showing you here. It's not a one-off thing. Okay, if it was a one-off thing, then obviously I'll be saying I don't want to say that word, but I'll be telling you crap. But why did it go all the way up there? Because someone smart sold up there. Why did it not go and make a new high? Because someone sold exactly where it turned around, so he wanted to come back there, period. It's not random that it came here. Okay, the level might be somewhere here, and then they decided to spook some people out, because maybe there's someone like me out there, right, and they understand it, so they might wanted to scare them a little bit, because I would have been. I did not sell short. Okay, I'm just showing you. But that level there, okay, someone did sell there. That's why price got there and then sold off. Okay, so your job is to go and identify why it sold off here, and then check on euro why euro also sold off here. Okay, and then compare them, the US 30 and this one. They look the same, right? Swing high, price comes back in, it looks as if it's gonna break it. Swing high, price comes back in, it looks as if it's gonna break it, but it doesn't. Why? Because the narrative on the higher time frame, always remember that the narrative on the higher time frame, it's not bullish. My mentor ICT, he calls it what does it call? As soon as I mentioned his name, I went blank. As soon as I mentioned his name, I went blank. But yeah, I totally forgot what I was going to say. Maybe I shouldn't have mentioned his name. But yeah, I don't know, I just went blank. But anyway, the draw on liquidity is to the downside, right? Market is bearish. So if market is bearish, then up candles are going to be respected, down candles are going to be broken. So up candles, right, price will find it hard to go above up candles, especially bearish order blocks. This one is not, that one is. So especially bearish order blocks, price will find it hard to go above it. Now if you don't do your analysis on the higher time frame, you're always gonna get stopped out. It's fact, it's simple. I said it earlier, if your trading is not going well, you're not looking at the higher time frame. So price is gonna reject and it's gonna continue going lower, and it's gonna reach for this gap here. So next week, look for continuation. Let's look on the 1 hour time frame. I like this one. I like that one. Okay, let me give you guys today's Easter holiday, so I'm kind of feeling generous. I'm kind of feeling generous. Why am I drawing? Let me just use this one. Should I or shouldn't I? Should I or shouldn't I? Yeah, today's, like I said, Easter holiday, so I'm feeling generous. In the swing high, take each candle, right, even on the lower time frame, as high as the H4. Take each candle as a daily. Think about it as the daily, because the daily will have lots of liquidity above the single daily high. So think about it this way: when price forms a swing high or a swing low, okay, what you want to do is look at the candle that leaves the swing high. Okay, look at the candle that leaves the swing high. That particular candle, look at the high. Look at the high. Above it, what do you see? If there is a gap above this candle's high, inside the swing high, that's where price is gonna go. And sometimes it might look scary. I'm showing you why price went very deep. into this one. Where was that example? Here, there's one actually here. Where did I just see it? Here. Right there. That's a swing low, right? So if you look below this candle's low, okay, if you look below this candle's low in here, is there an imbalance? If there is, that's where price is gonna go. So this whole using this as the order block, trying to buy this, right, you stay in a drawdown for some time before price comes back up in your favor. So when you're looking at the swing high and swing low, especially from the H4, not the anything lower, I'm not interested. I like H4 and daily. That's where I take my bias from. Like for example, this one here as well. Okay, 1, 2, 3. Why does price comes here? Because there will be some form of an imbalance down here that price is interested in, and it will come for that. All right, so on this time frame, that's what I was trying to find, but we don't have a perfect high because we had this wick here. I don't like it. On the 1 hour time frame, it looks like that. So you can steady in here on the lower time frame, right, from this high and up. Is there any imbalance that was left on the lower time frame? If there was, hint hint, it's gonna go for there and it's gonna create a big down candle, and that will create a retracement, and then it will continue going lower. So indices, they're all gonna continue going down, so look for sells only. That's where it's gonna reach for, and you can refine it. Okay, you can go into the lower time frame and then refine it somewhere in here. All right, there you go. I'm doing the job for you. Am I not so generous? I've done the job for you. So that's your target. If you want to look for precision, that's your real target. Inside that daily, big area daily, that's where price is gonna reach for, and you get out exactly at the high. My mentor is ICT. Where do you think I learned from? I learned everything that I know from ICT. All right, and then the rest is just studies, right? Everything, I mean, the whole looking at price, right, comes from ICT. But you know, ICT is smart, and he teaches for you to go and work for it. He's not gonna show you everything, because if he does, you're not gonna learn, right? So he teaches with gaps. He teaches for you to go and learn. He doesn't teach you like I do. Okay, I'm not saying he doesn't teach well. I'm just saying he doesn't teach the way like I do. When I'm teaching, or if I'm showing something, I just show you exactly how it is. But he will not. He will let you go work for it. Okay, I'm trying to be like I'm trying to be like him. If I'm showing you something, like I'm showing you a lot of things here right now, that you should work for it. Okay, because all I have to do is just give you that. Oh, where is it? All I have to do is give you this. That's all I have to do. If I give you this drawing and you've studied enough, okay, you know what I'm showing you. But I'm going into details, giving you more than I'm supposed to. All right, I'll leave it there. He's an inspiration, man. Without him, I wouldn't be here. All right, and without him, you wouldn't even be here either, because what you're watching is because of him. I wish to have just 1 hour with him. I don't know if you guys have seen. I did an interview with Trading Nuts, and I was telling him how I got banned from his mentorship, right? And the story started just like what I just said, right? I wish I had an hour with him, just him one on one, and I asked him a few questions. So this guy came up to me on Instagram saying he was ICT, and I believed him, because at the time, that's when I think I started sharing my stuff online, or my trade ideas online, and I don't know whether it caught his attention, or I don't know, but this guy came up to me saying that he was ICT, and I was over the moon, because I thought, ICT has contacted me personally on a personal level, not knowing he was a clown. Not knowing he was a clown, and he got me banned. Anyway, that's a story for another day. But yes, I wish I had, or I wish I'll have just 1 hour, and ask him few questions about price delivery. That's all. Few questions about price delivery. Anyway, look for continuation to the downside on the indices. I've just given you all the targets. This one I think is gonna trade down here as well. All right, so that's the indices. I think I've covered everything. I've done the currencies, I've done Bitcoin. Oh, did I do Bitcoin? Yeah, maybe I did not talk about it, but Bitcoin is gonna continue going lower. I like this equal low on Bitcoin. I was actually looking for it to sell off from here, up here, but it looks like it will struggle. I knew it will struggle, because we have an imbalance in here, so that area is gonna cause some problem for it to go higher. So Bitcoin should continue going lower for this equal low, and then Ethereum should go for this one, which is on the daily. but I like this candle's closing price. That's exactly where I'll get out. Even though I think it might go for somewhere here, I'll get out, or I'll take partial right below this candle's low, right? And then you can leave partial for it to continue going lower. You can see where they rejected. Someone smart sold, someone smart bought here. You can say support and resistance, but it's not, right? Because there was some form of an imbalance here, and I transposed it to the other side. It reacted, and then it got taken out, and then it retraced into it. So Ethereum should continue going lower and look for partial there. Apart from that, I think I'm done. I've got 7 minutes. I've been talking for 2 hours. I'll leave the rest. If you have any question, feel free to ask, and then I'll answer you. So I'm done. I've got 7 minutes before I finish. So if you have any question, feel free to ask. And if not, then I will go and have some breakfast and go and spend some time with the family. All right, thank you very much, Mario. You two have a wonderful Easter weekend. Enjoy, take your mind off the market, right, and enjoy. I personally, I can't, because I want to master the market, but you take your mind off the market and enjoy. Okay, so for those of you that, watching this live for the first time, I will be doing this going forward, Monday, Wednesdays, and Fridays, between 8 a.m. and 10, but from 8 to 9, mostly it's going to be a static screen, where what I'll try to do is I do wake up early. I'll wake up quite early. I'll find a setup that I'll be watching or I'll be trading, and I'll put what I'm expecting Price to do on the screen, and then I'll go and take my son to school because that's my job. I take him to school every day. So between 8 and 9, it will be a static screen with one, maybe before I leave home, because usually I leave home at 8:30 to take him to school. So between the 8 and 8:30, maybe I'll keep changing to look at other things, but exactly from 8:30, that 30 minutes period, because it's just a 30 minutes school run, for me to go and come back. When I come back, then we can look at other things, but between 8 and 8:30 will be me searching, or trying to give you what I'm looking, or the outlook for the day. And then from 8:30 to 9 will be a static screen. So between 8:30 to 9, you can go and do whatever you want to do. And then from 9 up to 10, it will be me now back. And if there's anything that looks good, we all can take it, and we finish at exactly 10. So between Monday and Friday, between Monday, Wednesday, Friday, that's how I'm gonna move. So if you do have friends, if you have anyone that is looking to learn to trade, just send them the link and tell them to join the YouTube on Mondays, Wednesdays, and Fridays. I do have a lot of requests. A lot of people are asking me, can you mentor me? Can you give me mentorship? I don't do that, right? Because it's just too much commitment. I don't do that. But what I do is this: I'll turn on the screen and then show you what Price is going to do. And then every now and then I drop hints on how you can do it yourself, because I believe feeding a man is not enough. You have to teach him how to feed himself. That's my philosophy. That's how I was trained, right? That's how ICT train everyone. It's not training you, or it's not going to feed you. You have to learn to feed yourself. And I adopted that philosophy from him. So I try my best to give you what you can also go and do for yourself. All right. So with that said, I appreciate all of you for joining me, and I will see you on Monday at 8 a.m. All right. Enjoy the rest of your weekend. Stay cool.